SNP leader Nicola Sturgeon has said overblown government warnings about the economic impact of leaving the EU risk alienating the public. The Scottish First Minister and Remain supporter said fear-based campaigning could have a negative effect on voters. She was speaking as Tory Leave backers dismissed a Treasury study suggesting Brexit would hit growth, jobs, wages, and house prices as more propaganda. Liam Fox said the analysis was disreputable, shabby, and misleading. The economic arguments for and against the EU have intensified with a month to go before the June 23 vote on Britain's membership, as Chancellor George Osborne said a vote to leave could propel the UK economy into a do-it-yourself recession. Trade and economy. How trade and the UK's economy are affected by membership of the EU. Why this issue matters. The debate. About half of UK trade is conducted with the EU. The EU single market allows the free movement of goods, services, capital, and workers. Trade negotiations with other parts of the world are conducted by the EU, not individual member states. Leave. UK companies would be freed from the burden of EU regulation. Trade with EU countries would continue because we import more from them than we export to them. Britain would be able to negotiate its own trade deals with other countries. Remain. Brexit would cause an economic shock and growth would be slower. As a share of exports, Britain is more dependent on the rest of the EU than they are on us. The UK would still have to apply EU rules to retain access to the single market. Appearing alongside David Cameron, he said in a worst-case severe shock scenario, a UK exit could result in 6% lower GDP over 2 years, the loss of 820,000 jobs, a 4% fall in average incomes, a 15% collapse in the value of the pound, and £39 added to government borrowing. The SNP leader, who is leading the campaign for a Remain vote in Scotland, said there would be an economic impact from leaving, but the Treasury was overstating its case. Ms. Sturgeon said Monday's assessment, the latest in the series of gloomy predictions of what would happen in the event of a vote to leave, could even be counterproductive. People have got the savvy to see through of some of the overblown claims, she said. We only have to look at the Scottish independence referendum to know that kind of fear-based campaigning starts to insult people's intelligence and can start to have a negative effect. Only a positive, upbeat message could deliver what was needed on June 24, she said, which was an overwhelming rather than a narrow victory for the Remain side. I'm much more interested in the reasons to stay in the European Union. The positive reasons, being part of a single market of 500 million people, the investment in jobs that come with that, but also the social and employment protections. Boris Johnson and other senior figures in the Vote Leave campaign said the worst-case scenario being talked about, based on there being no trade agreement with the EU after 2 years, was bleaker than the Great Depression of the 1930s, and the Treasury had been hopelessly wrong in previous forecasts, including in its support for the exchange rate mechanism in the early 1990s. Leave-supporting Conservative MPs attacked the study in the House of Commons, saying that it downplayed the risks of remaining in the EU and ignored alternative scenarios, such as the UK becoming a member of the European Economic Area. Bernard Jenkins said it was just rubbish and an example of a government obsessed with producing propaganda to get its way in the vote. Does not the government's entire campaign reinforce the unfortunate impression that today's political leaders will say anything which will help them get what they want, whether it is true or not? He asked. Brexit supporting economist Patrick Minford said the assessment ignored all the upsides from leaving, including the money saved from not being a member of the Common Agricultural Policy and not having to abide by EU regulation. Former Chancellor Lord Lawson accused the government of trying to scare the pants off voters, while UKIP Peace leader Nigel Farage said his opponent's strategy was irresponsible. It's pretty disgraceful the way voters are being bullied. Project Fear has now become Project Threat. But I think people are used to politicians not telling them the truth and getting it wrong. John Mills, the chair of the Labour Leave, said the Treasury's economic warning was grossly exaggerated. While there might be a small blip in the immediate aftermath of a vote to leave, he said the economy would soon recover to a higher level. These wild claims we hear from the Remain side do nothing to help their cause, he told the BBC News Channel. The Treasury published two different models of what may happen after a vote to leave based on three factors: the transition effect of the UK becoming less open to trade, the impact of economic uncertainty, and the potential volatility of financial markets. In the lesser shock scenario, based on assumptions of a bilateral trade agreement with the EU, it predicts economic growth would be 3.6% less than currently predicted in the 2 years after exit, sterling would fall by 12%, unemployment would rise by 520,000, average wages would fall by 2.8% and house price growth would be hit by 10%. Mr. Osborne said the analysis had been peer-reviewed prior to publication by Charlie Bean, a former Deputy Governor of the Bank of England, and that The Economist had said it was based on reasonable estimates and best practice procedures.